Hello and welcome to episode 2 of Budget Decoded by HDFC Securities. I am Preksha Shah, and as we gear up for the Union Budget 25-26 under the NDA 3.0 government, this special series is your go-to guide for breaking down the key takeaways and their impact on the economy and your investments. Today we are shifting gears to explore how the budget could shake things up for various sectors. Joining me for this deep dive are two of the best minds in the industry, Mr. Varun Lohchab, Head of Institutional Research, and Mr. Parikshit Kandpal, Senior Vice President, Institutional Research. Gentlemen, it's great to have you with us. So let's jump right straight into it. Starting with capital gains, there's always chatter around possible tweaks, but after the last year's status quo, expectations are seeming a little muted this time. That said, capital is important for growth. So, do you see any moves towards the capital gains tax in this budget?
So as a house, we don't expect any tweaks to the capital gains, tax. Last year there was an increase, and we believe government would stay with those numbers for the time being.
Okay, okay, sir. So now coming to infrastructure and capex, this is one of the areas where the budget usually makes a big splash. So the market is like closely watching whether the government will meet its capex target for FY25. So do you think there will be increased capex spending in the coming few months? And if yes, what does it mean for the subsequent year?
So, Preksha, we expect that there'll be some shortfall in the capex this year. So, we had at the start of the year in the interim budget as well as when the new budget was presented post the government formation, there was 11.1 trillion of capex planned. So we expect it to undershoot by about 15%. So somewhere around 9.2 to 9.5 trillion is our estimate that government will be able to incur that kind of a capex. So that sets the base lower. Uh, and getting into FY26, we expect low single digit kind of a growth uh, in the capex. So 11.1 trillion may grow maybe around 5% is my estimate. And given there is a 15% shortfall versus last year, so the growth will optically look much higher. So it will be close to about 20%, just about 20% growth. So which will be a strong enough growth for the investors to look in. And if you see largely the three segments which are the constituents of this major capex. So railways has been constituting about 24% of the overall capex, roads about 25%, and defense 16%. So these three segments put together are about 65% of the capex. And if I take long-term growth, say 5-year CAGR, how the capex has grown in this segment, so there's 12.4% in railways, approximately 13% in roads, and 9% in defense. And when I compare it with nominal GDP growth rate, so for FY25 is expected to be about 9.7%. So it is higher, almost a multiple of almost 1.3 times in railways and roads, and about 1 time in defense. So this government, going by our experience, seeing this government run and function, and the kind of capex they have undertaken and projects executed on the ground. So we believe that this government knows how to do capex, how to do infrastructure implementation on the ground. So I think that as a momentum and as a trend will continue even in FY26.
Okay, okay, so great. So coming to manufacturing. So could we see any expanded PLI schemes for products that India can manufacture possibly domestically, replacing the Chinese exports?
Yeah, so there is an expectation of further PLI schemes. Some of the existing PLI schemes have met with good success, and it is clearly on government's agenda to kind of boost manufacturing and make in India. So we expect there are two or three schemes which are still awaiting sort of final go ahead from the government. One is on mobile components and all, because on mobile assembly we have done quite well, but to take the next leap, we need a similar scheme on the mobile components. Then there is one around the steel industry. There is one around even expected in new sectors like footwear. So I think it will be a combination. What government would do is certain existing PLI schemes which have met with good sort of response. Even appliances is one apart from the mobile. We'll see that extending to components as well, so that the entire value chain shifts to India and we can do more value add in the process. And second is some of the newer sectors, we'll also see additional PLI schemes. Now, how many get announced in the budget or they happen, subsequently, because budget is not the only time which, the government could announce the PLI schemes, but we believe it's quite possible that they get announced in the budget itself.
Okay, sir. Sir, like you said, electronics could manufacturing could see a boost. Are we looking at another China plus one story kind of thing?
Yeah, so I think that China plus one has been playing out in case of, obviously it varies from product to product, but mobile phones definitely it's visible how India is garnering greater share, and now exports from India have become quite significant compared to say 5 6 years back when India was a net importer. Similarly, I think the government is quite keen on using that as a model example and extending a similar sort of a story in other electronic things, something like your laptops or TV. So the electronic imports is overall quite a large number for India, and they are looking to replicate the success of the mobile industry into other electronic products as well. So I think China plus one is definitely playing out in multiple segments, and that will remain the key focus area for the government.
Got it, sir. Okay. Coming to railways, it was, I think, market noticed railway stocks experience a surge ahead of the budget announcement. So, are we looking at any kind of allocations or reforms in the railway sector during the budget?
See, railways last year budget was about 2.6 trillion, and long-term CAGR has been 5-year CAGR has been 12.4% growth. So railways other challenges has been that there have been payment issues in particularly a lot of developers have faced as challenges on elevated working capital. So they were staying away from the ordering in this segment, but now what looks like there has been some changes in the way the contracts are awarded, so there should be some pickup. But this year we do expect upgradation of the entire rail network, increase in speed of the Vande Bharat trains. So uh, Vande Bharat train sets awarding, we are waiting for locos awarding. So this year really we believe that the railways ordering momentum should pick up, both on the upgradation of the network as well as the speed of the network and electrification of the network. So all these factors should play. And we also expect, like currently we have one high-speed rail under implementation, which is Mumbai-Ahmedabad corridor. So we do expect at least one more corridor to happen on the high-speed rail side, which is basically the bullet train. Other expectations is that government may also formulate some kind of financing mechanism which could be a little bit cheaper, maybe contemplating tax-free bonds and reintroducing them to push capex on the railway side as well as on the road side.
Okay, sir. Real estate players, coming to real estate players are hoping for some incentives or tax relief for affordable housing, especially since the home loan rates are elevating. So, given the rising property prices, do you think government will introduce any measures to improve housing affordability, and what could possibly move the needle?
So, in the last budget, government has showcased its intention of basically for urban class. They have introduced allocation, higher allocation from Awas Yojana for urban and rural. The allocation has gone up. So, they clearly, I think this time they are looking at implementing some scheme to help deserving middle class who are living in rented houses or slums or chawls or unauthorized colonies for their redevelopment. So some kind of push could be there, some state support may be given from central side to get this decluttered and develop housing for this kind of people who are living in the lower middle class in slums. So that is one push which will help leading developers to basically unlock the value potentially on the real estate. So that is one thing we're looking at. Also, there was intention of the central to government to reduce stamp duty and encourage the states to reduce stamp duty where the stamp duty is really high. So this could not get implemented last year, but my sense is that they'll give a bigger push this year, at least where the governments are same. So there could potentially be some cuts in stamp duty, which is now in some states as high as 10 to 12%. So that could be reset lower. So that will incentivize and take some of the pressure on the pricing, which has gone up. Also, re-looking at the ATC limits on principal repayment, which is capped at 1.5, because that limit gets capped, plus your exemption on interest, which has been 2 lakhs, and it has not been catching up with inflation. So our sense is that either if the direct tax code comes in, so or if the exemptions are allowed, so there could be regrouping and a higher allocation of 5 lakh, particular in pertaining to the housing, up to 5 lakhs can come in this budget, so which should be positive. Affordable housing increase in the carpet area plus the value of the housing which has gone up, so reintroduction of that could happen. There was a sunset clause last time, they had given 100% exemption on taxation, so maybe they will relook to this time reintroducing it with larger areas and larger values of housing.
Got it. Got it. Great, sir. Now, I think coming to defense, that's usually a global opportunity. Given the rising geopolitical tensions, a budgetary boost is expected, but investors believe defense stocks are already trading at higher PE valuations. Are these valuations a concern, or are we seeing any long-term structural growth continuing in the defense sector?
The defense spending has been relatively lower when I see the three pieces, railway, roads, and defense. So the growth here has been 9% versus 13% CAGR. But there is always an expectation and euphoria around the budget when the announcements come in and these geopolitical things play out. So people do ascribe a high multiple, and there are very limited companies in defense, and it's very closely guarded kind of a sector. The entry barriers are really high, and few select government PSUs have an upper hand. Typically, what we have seen in the past, that there's not too much of a private play. Private players are trying to get in, but larger part of the ordering does go to the public sector. So it will remain as a theme because of, as you rightly said, we have not so great bordering countries around us, so they're hostile countries. So the government push will be there, and given there could be some with the new administration coming in USA, so there could be some receding of some of the global tensions. So the India may find its time to step up and build capacity on the defense side. I think that will be their intention and focus area. They want to be self-sufficient on defense, and that as a trend will continue. So we expect that defense sector to continue to do well.
Okay, sir. So coming to market sentiments and FII's flows, FIIs have been net sellers across sectors. How should the budget address these investor concerns to restore the confidence and attract FII inflows?
See, I think FI outflows which we have been seeing are for various reasons, and probably Indian economy not doing well is not the main reason. Where do they say opportunities across the globe? So FIIs allocate money basis that, right now with Trump coming in, a lot of money has been moving out to US market. Bond yields also out there have spiked up. So, which invariably leads to emerging market outflows. And India as a market has done very well last 2 3 years. So there is some natural profit booking happening by FIIs. So I don't think government can do anything, completely out of the box or just trying to attract FIIs from a short-term point of view. I think what FIIs would like in the budget and what could make them kind of, I think most of them are still bullish on India from a medium to long-term perspective when we speak to them. In terms of, I think India still offers one of the best GDP growth over the medium to long term. I think few things which definitely will help, the FII sentiment is one, the growth coming back. So there has been a bit of a cyclical slowdown in FY25 in Indian, corporate earnings and overall GDP growth numbers if you see last few quarters. And part of it was because of, the government capex not being up to the mark, private capex still not kind of showing great signs of pickup. Uh, And we believe consumption, which has been on the weaker side, has continued to be a pain point, especially urban consumption. So I think if the government in this budget could again try to revive growth, and increase their spends and expenditure on both consumption and investment in a balanced way. Last few years has been more investment oriented, the capex oriented budgets. We believe, while as Parikshit said, the growth on capex will still be a healthy one compared to the revised estimates, because on those numbers we can see still a 15-20% growth for next year. And if government kind of gives certain lowers the tax rate for the salaried class, so does something to alleviate the stress in the in mid income sort of pockets of consumption, urban poor which have been hit hard by inflation. So any steps to kind of improve consumption, job creation, I think will be taken positively. So while I think fiscal prudence has been excellent by this government, and we have been coming down on fiscal deficit, and even this year we believe, given tax collections have been buoyant and expenditures have been under control, we'll continue to see lower fiscal deficit number as a percentage of GDP. We believe if the government tries to kind of not be overly fiscally prudent and tries to spend a little bit more on both investment on the capex and on the and through tax breaks on the consumption side, that will be taken positively by FIIs, because that will revive the confidence in medium to long term growth of Indian economy.
Got it, sir. And now, sir, finally, from a market perspective, how is HDFC Securities gearing up for the budget day, and what themes are on your radar?
So see, frankly, for us, budget is like, it obviously is an important day because it tells about the government intent and direction. But frankly, there are a lot of things which keep happening through the year, and both from a government policy side and from corporate perspective, which we tend to follow equally closely, and we tend to focus on. So as I said, in the themes in this budget are essentially these two. One, on infrastructure and capex, does the government continue to keep its thrust? And secondly, on the consumption side, there is a much needed sort of a boost required through both, one, rural schemes continuing to get higher allocation, and secondly, some tax breaks for the urban consumption to get a fillip. So I think these themes will be continued to look at. I think the government last budget had also talked about job creation and skill development as one of the key focus areas, where that whole internship program had started. We believe further details and building up on that scheme would also be positive from a medium to long term point of view. Some of the manufacturing related PLI scheme announcements and all would again be would be keenly watched. So I think as a house, we tend to focus more on mid to long term. So therefore, these kind of announcements which have a greater impact on medium term growth rate of the economy, those will be closely watched.
Got it, sir. Thank you so much, Mr. Varun and Mr. Parikshit, for joining us and sharing such practical insight. It's always a pleasure to get your perspectives. And
Thanks.
with that, we wrap up the episode of Budget Decoded. Coming up next, we'll turn the spotlight on tax proposals and what they mean for investor wallets. Stay tuned, and until then, thank you for watching and happy investing.
Thanks, Preksha. Thanks.
Thank
Thank
you
you,
so much,
Preksha.
sir. Thank you so much for taking time. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.